What's up, you guys? It's Rob here. Today, I got a different one for you guys. Not sure that a lot of people are going to be invested in this one, but this is definitely a stock that I am holding very dearly because it could be absolutely massive. It is definitely one of I'm going to say it's definitely one of my larger holdings within my portfolio because I think this company could absolutely blow up and they are incredibly undervalued right now. They were given a price target and it is still trading underneath that price target. So anytime that I'm getting profits from any of my options contracts or anything like that, I'm immediately putting it into the stock because this stock is absolutely huge, and I think it's going to be a big company, and it has the potential to rival their competitor, Dexcom. And in my personal opinion, I think if they don't get bought out by somebody, I think they could rival Dexcom in the near future. So, what I'm going to do is we're going to talk about this company, and before we dive into this, I'm going to show you the DD that I did on this company myself and the reason why I am very bullish on this company. And then we'll go over the chart, look at the history of the stock and all that kind of stuff. But before we do all that kind of stuff, if you guys can, do me a favor, drop a like down on this video. Make sure that you hit that subscribe button, that you ring that bell too, and turn on the notifications. Also, I do have my Webull referral link down below. You do get 2 free stocks when you join Webull, one when your account's approved, and then the other when you deposit $100 on the platform. And those 2 free stocks can be valued anywhere between $8 and $1,600. And since you did use my referral link, I do give it a free stock as well. Pardon me. Sorry about that. um, but just to unveil the cover, the huge company that I'm going to be talking about today is SENS. This is definitely a penny stock that a lot of people are probably haven't heard of, but the ticker symbol is SENS. So I did this DD roughly back in March, and this is the 3 pages that I've pretty much comprised of. But to give you a hint, what Senseonics is Senseonics is a Maryland-based pharma company with a current market cap around $1.25 billion USD as of March of 2021. So this might have changed a little bit. They focus on glucose monitoring devices. So glucose monitoring devices are often used in people who have diabetes. So keep that in mind. They have developed a new device that is implantable. It requires an elective surgery by a doctor. The device is targeted to those who suffer from diabetes and need to track their glucose levels. The device does not require you to prick your finger, which is a huge thing. And I put a link in here that will take you out to the SENS website. But the huge thing is SENS has this glucose monitoring device that works for 90 days. They're currently waiting on an FDA approval of a 180-day device. Now, like I said in the DD, does require an elective surgery. And the fact that we just came out of a pandemic, elective surgeries were not that common. So I really think once we get out of this pandemic and pick up, and if SENS it's their 180 device approved, they're going to beat their rival Dexcom, which is a $400 stock it's just going to be nowhere near competitive. Now, the only downside about Senseonics right now is that their 90-day device isn't technically approved by insurance. So it does cost a lot to have the surgery. So there's pros and cons to it. So Dexcom is technically covered underneath insurance, while this currently isn't. But I'm sure SENS, if they do get their 180-day device approved, they probably will go through the process to get insurance done on it. So, geez, pardon me. I'm sorry about that, guys. But the huge thing is the sensor is currently the size of a penny, so keep that in mind. It is surgically implanted into the patient and the transmitter sits on top of it. The transmitter communicates with a mobile app which tracks and monitors your glucose levels. The sensor does remain accurate when exercising or putting the body underneath stress. Most of the times when you have your blood sugar levels and you have to prick your finger, it's not exactly that accurate. The sensor is currently only good for 90 days, which is a con because you have to have an elective surgery every 90 days. So, and it's not covered underneath insurance still as of March. So keep in mind, take this with a grain of salt, but do your own due diligence. I did mine here. I'm sharing it with you guys. The huge thing is hopefully they get this covered underneath insurance. They might have already have it covered underneath insurance. So if they have, drop a comment down below. Let me know so I can update my DD. But the huge thing is taking a look at the target. So the prevalence is in 2018, 34.2 million Americans, or 10% of the population, had diabetes. So you have a very large, broad audience. Now, all this information was done by the ADA. So undiagnosed people, of the 34.2 million adults with diabetes, 26.8 million were diagnosed and 7.3 were undiagnosed. So keep that in mind. So you do have a very large target audience. Now, the huge thing that I want to pull up here, and I'm going to make this as big as I can, is SENS is an incredibly shorted stock. Let me pull up Vortex here. This AMC. So Senseonics Holdings. So take a look at so the short interest of free float on this stock is 20.8%. It's a penny stock. And the short shares alone is sitting at 71.55. So this is up there rivaling with GameStop. And the cost to borrow, 4.29, and the days to cover is 1.88. So definitely a huge thing. So I'm going to click on here. The short interest or free float has actually been decreasing, and the price has been increasing right now. So it tells me the shorts are definitely possibly covering their position. But let's hop back here into the DD. So overall, definitely a very heavily shorted stock. So FDA approval history. So Senseonics is currently waiting on FDA approval of their 180-day CGM monitoring device. But due to the pandemic, the approval has been shelved by the FDA for approvals of items related to the pandemic. Completely understandable. While a company waits for FDA approval, they are raking in good press behind the device. Examples, let's pull up each one of these. No, I didn't want to do it that way. No. Worse. So, good press. Senseonics adds another insurer, initiates $50 million offering. Thank you, ads. It's the exact reason why I don't click on these links, is because everything has an ad these days. So all the news thus far has been great for the device and hasn't hit the markets yet. Keep in mind that this device is also approved over in Europe, so you can see some European studies on the device. The company has had a successful history in getting the current CGM device approved by I don't know why this is FSA, it's the FDA. So upside with Senseonics' superior product compared to their competitors, Dexcom, $400 stock. Cost savings and patient outcomes. So if their 180-day device is approved, you have the elective surgery. You don't have to go back in and have another surgery. And keep in mind, it's only the size of a penny. And you don't have to worry about pricking your finger every single day. I don't suffer from diabetes. I personally consider myself lucky from that because it does run in my family. But those who do, I know that's probably one of the things that drives them utterly insane. Drop a comment down below. If you can relate with this, please just let me know because I'm honestly curious. But experience in the management team is decent rating on Glassdoor for a small company, which is good. You want to take a look at how the company and how the employees' sentiment is within the company. Many more insurance to start covering their product, which is good because we want to be cheaper and have it covered by insurance. A lot of market shares are still available. The forecast of increased revenue, especially with COVID being controlled soon. So hopefully once COVID is done, we will see it hop upwards. And this is a very shorted stock. Like I said and showed you guys, it's very shorted and it's underrated. And there's plenty of gains. Insert all the rocket emojis because it is currently trading at, if we pull up Webull here, $2.28, and its rival is Dexcom trading at $400. So keep that in mind. But huge thing is, hop back here. We're waiting on approval for their 180-day device. FDA approval should be coming very soon. People were saying Q2, Q3, but I'm going to honestly say probably more towards Q3, Q4 in my personal opinion. So they are increasing revenue from year to year. Diabetes market will not shrink. If anything, I believe it will grow with increasing abundance of food choices developing countries that are coming up and coming. Huge thing. Hey, me, geez. Their final form will honestly take 80% of market share. Why would anyone stay with a product that you would have to change every 10 or 14 days when there's something that can be changed every year? So the other huge thing is they're working on 180 days. They're also working 365. So if they can have just 90, 180, or 365 days that you don't have to worry about pricking your finger, that's huge. That is honestly huge. So the only downside with Senseonics right now is the company has burned through a lot of the the company has a lot of cash burn compared to their current revenue. Their debt to asset ratio is considerably high. I believe but most startups are especially this way, and they will grow. The company was affected by COVID as many people were not able to go to the doctor's office and get this elective surgery. Their sales and marketing took a big hit. This does not recover. You can continue to see the cash burn essentially because that's what it's going to happen. They need to try to stay afloat. There's a calibration that is needed for the machine twice a day, which is quite a lot, but this will eventually be worked out. Keep in mind, like, this is just getting the device preliminary approved. So even Dexcom and order generation still needs calibration. This obviously will eventually change as the product matures. I mean, they will, as they mature this product, I'm sure that they will gladly get it out there, kind of thing. So overall, my thoughts on this is the company is currently profitable and has a ton of upside. I mean, ton of upside. Is currently being held down by the shortening of a stock and pretty much don't have a reason why. Maybe Dexcom doesn't like the competition of Senseonics. Who knows? Another reason might be that they were running out of cash and diluting the share price. So they did do a lot of offerings to raise money for the company. So the company would be a solid buyout for a large company like Dexcom that would want to absorb the competitor and use the device. So that's the huge thing that I said back in the beginning of this video was it would be huge if this could happen. So the stock in my eyes will hover around $3 to $5. Actually, it fell down below that. We're currently sitting at 228 at a share, but once the 180-day gets device, SENS will set themselves apart from their competition. Once the 180 device is approved, my price target, honestly, with where we're trading at right now, I'm going to change this from, I would still stick around $10 a share. And if Dexcom doesn't buy out the company, I could see this stock easily being $50 to $60 a share as they continue to grow and work towards their 365-day CGM device and looking to get that approved by the FDA. I will continue, like I said down here, it's pretty much my statement saying I will continue to do this, but this is not a short-term play, guys. This is definitely a long-term play. This is not a stock that I'm going to be looking at trying to flip in a couple weeks kind of thing. This is something that I'm going to be holding for at least a year, if not longer. So really taking a look at the chart, we actually had a very positive day for SENS. We were up 8%. The huge thing that I'm going to do is I'm going to hop out to the month time frame. Try not to make this too boring for you guys, but we were really doing good for a while. I'm going to really scroll out here. So we were doing really good for a while, and then it seems like the market correction really took a detriment on the stock. And this stock absolutely got driven into the dirt, literally driven into the dirt. It had a low of $1.69, which is huge. This stock has a 52-week high of $5.56, which is crazy. Keep that in mind. Now, the 52-week low is 34 cents, so that is very low. But this stock has absolutely been beaten down to a pulp, in my personal opinion. And I am very passionate about the company because I think this company could be a game changer. And I know Kathy Wood likes disruptors within the stock market. I absolutely think this company could be a disruptor in my personal opinion. But that's what I got for you guys today with Senseonics. This is personally one of my larger holdings. Yes, it is a penny stock. I do hold stocks and I do hold leaps for 2022 and 2023 for the stock because I think it could absolutely move kind of thing. So if you guys have any questions or anything like that, or have any questions about my DD, feel free to drop a comment down below. Also, remember, make sure that you hit that subscribe button, that you ring that bell too, and you turn on the notifications. And referral link is down below too. But I'll see you guys in the next one. Peace.